Ladies and gentlemen, good day and welcome to Q1FY27 conference call to discuss operational and financial performance for Vintage Coffee and Beverages Ltd, hosted by Nuvama Wealth. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Palash Kawale from Nuvama Wealth. Thank you, and over to you, Mr. Kawale.
Thank you. Good morning, everyone. I welcome you all on behalf of Nuvama Wealth. I thank the management of Vintage Coffee and Beverages Limited for the opportunity to host their Q1 FY27 earnings call. We have with us today Mr. Balakrishna Tati, Chairman and MD, Mr. Sai Teja Tati, Executive Director, Mr. Kranti Kumar Yarkali, Chief Financial Officer, and Mr. Jawahar Konjivaram, Head of Sales and Marketing. I will now hand over the call to Mr. Balakrishna Tati to take us through the quarter. Thank you all, and over to you, Bala sir.
Thank you, Palash. Good morning. Good morning, everyone. Welcome to Q1 FY27 earnings conference call of Vintage Coffee and Beverages Limited. On behalf of the management, I would like to thank all investors, analysts, and stakeholders for joining us today for your continued trust and support. Q1 FY27 is an important quarter for us because this quarter we have achieved a great milestone marked by strong financial performance, successful capacity expansion, and disciplined execution. Just I'll give you a small glance about the financial performance of Q1 FY27. Q1 was another strong quarter for the company, reflecting healthy demand for improved operating scale despite the seasonal lean period. Revenue for the quarter stood at 161 crores, registering a robust year-on-year growth of 58.4% compared to 101.6 crores in Q1 FY26. EBITDA increased to 31.6 crores from 18 crores in the corresponding quarter of last year, representing a growth of 75.2%. Profit after tax stood at 20.8 crores compared to 14.2 crores in Q1 FY26, reflecting a healthy growth of 46.1%. Our PAT margin remained a strong at 12.9%, demonstrating our ability to sustain profitability while continuing to invest in future growth initiatives. Alongside our strong financial performance, the company also made significant progress in expanding its manufacturing capacities. As many of you may recall, we commissioned an additional 2,000 metric tons of production capacity last year, January, taking our total installed capacity to 6,500 metric tons. Further, we have increased the capacity FY26 by another 4,500 tons, making to 11,000 metric tons, representing an increase of approximately 69%. The most important factor is that the entire expansion has carried out completely from the internal accruals of the company, revenues, cash generated, and in a disciplined capital allocation approach. The expanded capacity became fully operational from Q1 FY27 and positioned us well to support future demand while enhancing operating leverage. We are also pleased to inform our stakeholders, of course we have already communicated, we are pleased to inform the stakeholders that National Company Law Tribunal NCLT has approved amalgamation of our wholly owned subsidiaries Vintage Coffee Private Limited and Delecto Foods Private Limited with Vintage Coffee and Beverages Limited effective July 21, 2026. This strategic consolidation brings all business under a single corporate entity, enabling us to optimize manufacturing facility, equipment, and human resources. The merger is expected to improve operational efficiency, reduce administrative costs, strengthen the profitability, achieve greater economies of scale, and create long-term value for all stakeholders. With regards to the upcoming expansion of freeze-dried coffee, we continue to make a steady progress on our proposed expansion plan with the installed capacity of 5,500 metric tons per annum. The company has secured the land from Telangana government under the food processing zone and also paid substantial amount advances to the equipment suppliers, and the construction operations are being started. With this 5,500 metric tons of additional capacity of freeze-dried coffee, the company is going to have a significant growth in total capacity increase from 16,500, 11,000 plus 5,500, 16,500 metric tons per annum. With regards to the coffee market, prices are now more or less stable at a level around $3,500 to $3,800 per metric tons. Based on the current market outlook, we expect prices to remain broadly within this range during the current year. Brazil is expected to witness a healthy crop, which is a positive factor for supply. On the other hand, weather-related risks, including the potential impact, could affect production. Considering these offsetting factors, we believe green coffee prices are likely to remain relatively stable over the next term. On the logistic front, geopolitical tensions in the Middle East and resulted in higher LPG and diesel prices led to modest increase in transit time during the disruption. However, the situation has stabilized to a considerable extent, and the overall impact on our business remains negligible as our exposure to the Middle East market is relatively limited. Our continued focus on strategic expansion, customer-centric innovation, operational excellence, and disciplined execution continues to drive strong business performance. Thank you once again for joining us today. We will now open the floor for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask questions may please press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Priyanshu Jain from Growth X Infinity. Please go ahead.
Hi, am I audible?
Yes, you are. Please proceed.
Yes.
Hi, sir. Congratulations on decent set of results. So I have few questions. First will be on the utilization side. So from the capacity which we have added recently, the 4,500 metric tons. So like from that capacity, we started the production in after Q1, or like we have some revenue we gathered from in Q1 itself. First, this question.
Yeah, this 4,500 metric tons capacity we have commenced in the month of March, end March. So the Q1FY27 we will have a full capacity utilization of this additional 4,500 metric tons.
Okay, so like we are running at 100% or 95% utilization from the 4,500 metric tons?
It should be in the region of around 90%.
So on a sequential basis, if I have, that is the question that if on a sequential level, like our revenue declined. So can you like brief up on that aspect, like on what levels like our margins, our revenue declined?
Yeah, Jayant, if you see Q1, always the revenues are slightly lower side only. If you see the traditionally in the history of the companies of the soluble coffee industry, I think so because this is in a lean period, as in a summer. So April, May, June, and also second quarter also slightly there will be a better improvement than the first quarter. But then the third quarter and fourth quarter will be a full swing. However, we continue to produce the full capacity and we stock it, and then we can, because this is a lean period. Basically, quarter one is a lean period, but then it will start improving from second quarter onwards.
Okay, got it, sir. The second question will be on the margin side. As we are seeing improvement in our margins, so like from here onwards as well, we should expect an increase in margins, and till at what level, efficiency can be improved for margins?
Yeah, since the capacity has increased, obviously there will be a slight improvement in the margins. I can only say that in percentage wise, it should be in the region of around 1% it can increase in overall.
So around 21% we can expect going forward? 21%?
No, not 21%. If you see the current levels of Q1, I think it is it is more or less same, but maybe a 0.51% there will be incremental growth.
Okay, got it. And so on the capacity expansion side, when we are expecting our, because I think missed the initial remarks, so I'm sorry for that, but when we are expecting the freeze-dried coffee to be commercialized?
No, we are planning to be in the mid of next year. By June, we should able to complete the trials and then start from second quarter onwards. This is what we are anticipating as on today, and things are going in accordance with our expectations. If everything goes well, then we can able to do in a second quarter itself to start the production.
Okay, got it, sir. Thank you. That's all from my side. All the best.
Yeah. Okay.
Thank you.
Thank you.
We'll take the next question from the line of Vibhanshi Jain from Veer Growth Fund. Please go ahead.
Am I audible?
Yes, you are, ma'am.
Great.
Yeah. So, despite one of your peers have relatively more premium product mix, your EBITDA per kg is around 160 to 170 per kg, compared with roughly 137 per kg for the peer company. So I want to understand what specifically enables us to generate this higher EBITDA per kg, or is it a geographical presence or packaging mix or something raw material procurement, or I want to get a brief on what enables us to have a higher EBITDA per kg.
Vibhanshi, the EBITDA per kg can be viewed in a different way. See, it is all depends upon the product mix, then packs mix, and also the country which we are exporting. It all depends upon that. So it will be definitely vary from company to companies, obviously. So that is the only major things which I think can be made in a product mix and pack mix.
It's a product mix and a geographical presence in which we are sending the coffee.
So,
hello.
Sorry, come again.
I want to understand what is driving this EBITDA per kg. Is it a product mix or a country mix? For example, your peer company has a premium product mix despite it is having a lower EBITDA per kg, but we are commanding higher. So is it because of the geography in which we are exporting, something like that?
Yeah, Vibhanshi, see, I'll tell you, it is all depends, as I mentioned to you, product mix and the pack mix combined, it will make some change in the realization, obviously, and then EBITDA proportionately will change. So, but the point is that if it is in a product, pack mix is on a slightly higher side, if we are doing a more consumer packs and all, obviously then the EBITDA level will be better, and if we are doing more in bulk, then EBITDA level will be in a slightly lower side. So that makes difference.
Okay, so if our packaging mix remains broadly similar, so it is our 160 to 170 per kg EBITDA is a sustainable run rate, right?
No, I can't give any comment on that, but the point I can only tell you that, as I mentioned, that because it depends upon that bulk, obviously, if there is a bulk sales, bulk packaging, and obviously the realization will be slightly lower and the EBITDA will be slightly lower. But if it is a packs, obviously, then there will be a slightly higher side. But we never know that, because it's very difficult for us to give an answer for this, because tomorrow when we grow to the bigger capacity levels, obviously, because it depends upon the mix factors,
Okay, like in going forward, if we do a bulk packaging, then our EBITDA per kg may reduce. It depends upon the bulk and the consumer packaging, right?
Yes, Vibhashi, I'll tell you, ours is a cost plus margin. So obviously, we have a fixed profits on a per kg basis. So if the bulk sales increases, obviously the realization, the EBITDA, the profits will drop slightly. And if consumer packs increases, though it will higher realization on a price as well as that, profit levels also slightly better.
Okay, sir. Thank you.
Thank you. We'll take the next question from the line of Ganesh Rao from Punarvi Capital. Before we take the next question, request to all the participants to kindly limit their questions to only 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from Ganesh Rao from Punarvi Capital. Please go ahead.
Thank you. Am I audible?
Yes, Ganesh.
Yes.
Awesome. Thank you. Sir, I have 3 questions, but I'll try to limit it to 2 and I'll join back with you. First is on the order visibility. Is it possible for you to quantify how much of our FY27 volume are already backed by our annual contracts or customer commitments? And additionally, how should investors think about the visibility for FY28 also, sir? Particularly with the freeze-dried capacity coming in, right? How does FY28 also look for you from a commitment perspective?
Okay, Ganesh. I'll just explain you we always procure the coffee beans on a back-to-back basis. When we get an export orders, immediately we place an order for coffee beans. And we have the commitment from the customer for the whole year, 22 their requirements and all, but the prices are fixed on a quarterly basis. So with regards to the current year, we are more or less through with the arrangements with the customers, what the quantity they are going to buy from us, and that projection is already with us. So with regards to the freeze-dried coffee, which is coming up in the next year, we also have the visibility on that, because we have taken a letter of intent from the few customers, and which they are agreed to pick up around 70 to 80% of the total installed capacity of freeze-dried coffee, subject to the quality and price. So that all depends upon the next once we start the production. But otherwise, we have the visibility and we have the focus, and we know exactly which markets we are going to sell it. There is a business plan. We are going in accordance with the business plan.
Oh, that is fantastic, sir. So just to rephrase this thing, for FY28, when the freeze-dried capacity comes in, you have roughly 70 to 80% of commitments and or letter of intent, right?
That's right.
And for FY27, sir, are you completely booked out? Can you quantify this rough ballpark number?
More or less, we have a volume commitment from the customers for the entire quantities. But then again, as I mentioned to you, it depends upon the prices, how the market, price escalates and all, because we fix the price on a quarterly basis. So otherwise, the volume commitments, we got it for the whole year. FY27.
Awesome. That is great to hear. Sir. And one follow-up question on the freeze-dried capacity. In this 70 to 80%, right, sir, how much of that is from existing customers versus any new customer relationship that you guys have built?
Yeah, we are adding the new customers also. In fact, this Q1, we have not added any new customers because it's a lean period. So obviously, we'll keep adding the new customers. And you're talking about the existing capacities or freeze-dried coffee?
On freeze-dried capacity, sir.
No, freeze-dried capacities, we have the existing and as well the new customers also.
Okay. Because I was wondering if it was new customers and they're coming in for your freeze-dried capacity, that would be like even more beneficial because, we'll have a lot more tailwind, and hence I was trying to kind of double-click on that. Okay. And sir, kind of piggybacking on the previous participant's question, right? I mean, I just want to understand broadly, right, what is our right to win, right? What is our competitive advantage, right? As we scale our capacity to, say, 16,500 metric tons in the near term, can you shed some light on what is our company's right to win in the business, right, against the large players globally? I don't want to name peers over there. Is it our customization, customer relationship, or pricing? If you can just expand on that, that will be really helpful for all of us.
It is a combined, Mr. Ganesh. What happens, it all depends upon the geography and the quality and the blend what customer taking, and also the pack what they buy it. It all depends upon. If you see, if it is in a glass jars and if we use a more of Arabica, then it depends. The price will be quite different, and the quality is completely different. And this all depends upon the customer centric, whatever they are looking in their geography and the sales, the brand, what they are doing it. Absolutely, it all depends upon on that, their sales prospect.
But our right to win is like we are able to make it according to the specifications, right? And we have heard our peers also say that they can make it according to the specification that they want. So like, what is like really niche in our space, sir?
Yeah, well, this last sentence, can you speak little louder if you don't mind? Little louder?
Yeah, sure. I mean, like, for example, if I take like product customization, like, what blending do we want? What specific ratios of blending do you want, right? Even our peers can do that in some sense, right? As you kind of alluded to. Is there any kind of differentiating factor with us that's specifically kind of giving us guarantee or good visibility into what capacities we have?
No, the blending ratios and other things and all is not given by the customer. So it is in our internal R&D and quality development department, they do that one. So it is not recommended by the customer. So we don't get any information from the customers with regards to that. And whatever the recipe which we have, that we don't normally share to any customers. So we develop a blend, and that particular blend is marked for the customer exclusively, and we don't sell it to any other customers. Yes, it's possible that the customer may go to our competitor or peers and try to get the product, but that is really not workable. Why? Because the same blend, exact blend, they may not able to do that. So obviously they don't go normally, because I have a customer retention is almost 98%. So for the last so many years they are with us. I never saw a customer going to somebody for the same blend.
Perfect. Thank you, sir. I think that's probably the relationship that you have built over the many years with them. Thank you, sir. I have a few more, but I'll come join back in with you. Appreciate it.
Okay. Yes, thank you.
Thank you. A request to all the participants to kindly limit their questions to only 2 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Ishan Modi from AMC Assets. Please go ahead.
Yeah, so I joined the late a bit call. Can you let me know what was the volume this quarter we did? What was the EBITDA per kg we got this quarter?
Ishan, can you speak little louder, please?
Yeah. Am I audible now properly?
Yeah.
Yeah. So I was saying, like, I joined the call little bit. Can you let me know what was the volume this quarter and what was the EBITDA per kg? Hello?
EBITDA per kg for the Q1 is 157.
And what was the volume, sir, this quarter?
1856 metric tons.
Sorry, what?
1,856 metric tons.
All right. And sir, just one request here. So, like when we give the press release during our results, can we also mention its volume and EBITDA per kg in the press release, because it gives more visibility earlier than we declared that in a Concall.
Okay, noted. I will ask my finance department to, when they give it, then they will include that also. Well noted, Isha.
Thank you. That would be very helpful. That's all from my side.
Thank you. We'll take the next question from the line of Onkar Gugardare from Shree Investments. Please go ahead.
Yeah. Good morning, sir. My question is regarding at 100% capacity utilization, what would be the revenue you can clock in the newly commissioned capacity? And because of the maintenance last quarter, how much revenue you would have lost? That's the first question.
Hi, Onkar. Now, this question, you're talking about for 100% capacity FY27, is it?
Yeah, in the newly commissioned capacity of 4,500 metric tons.
Okay, fine, understood. So the total 11,000 metric tons out of that total capacity utilization. So we may end up around 10,500. This is what we are planning now. So considering today's price and today's realization and all, so you can calculate on the basis of the capacities, you will get the figure. But it all depends again, as I mentioned that we are fixing the prices on a quarterly basis. It again keep varying. Maybe for example, if I say for some 1,000 crores or 500 crores or 800 crores, but again if the coffee prices moves upward, then this price, the revenues will increase it proportionately. So it's very difficult to say the revenue. But I think if you have a quarter one figure, so then you can calculate, then you will know that.
Correct. Okay. And the second part of the question, how much you would have lost because of maintenance?
Maintenance, you are saying? No. This is an annual maintenance for 15 days. What we took it every year. So this we already taken. There is no production loss. This we already taken because this plant runs 24/7. So round the clock we run the plant. So in a year we take a 15 days annual maintenance. So that we have taken into consideration in the production capacities. After taking that only it will come to 11,000 tons.
Okay. The second question is on with all the initiatives like shifting to premium products like freeze-dried coffee and selling more in consumer packets. Like, can we expect the consolidated margins to be at say 22-23% in next 2 years by FY28 or FY29?
Yeah, we have in our business plan, we have already mentioned it, the freeze-dried coffee realization will be better than the spray-dried coffee, and the consolidation should be in the region of around, it should be in the region of around 23-24%, if I'm not mistaken. That's the one, and the second is that we may not able to go in a full with the consumer packs for the freeze-dried coffee. We may go with the bulk and as well as consumer packs. So obviously then the EBITDA level will be not really as high as what we are expecting, but it is much better than the spray-dried and agglomeration.
But we can consider around 23-24% consolidated EBITDA margin, right, in the next 2 years.
That's what we have considered in our business plan.
Okay, I'm done with the question. Just a small suggestion. Can you earlier 2 quarters back you used to provide a presentation, but now you have stopped giving the presentation because in that you used to mention the capacity utilization and all that. So can you please start uploading presentations once again? And is it possible to do the conference call like immediately after the results are declared? Those are the 2 suggestions, sir.
Okay, perfect. Okay. This normally every quarter we give a presentation. So I think now presentation also in pipeline. I think we are going to upload it any moment. And Concall, with regards to Concall, sure we'll give it the next day only. I think this time there was some holidays or I was traveling something, so we could not able to make it. But otherwise we'll give it the next day only. Well noted your point.
Sure. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Yeah, thank you for taking my question. So just firstly, the volume number that you mentioned, I missed that number. Hello?
Quantities you are talking about? Volumes?
Yeah, the volumes for the
Q1 for the whole year.
Q1.
Q1 1856 is the sales, no? 2402 is the production.
2024.
2402.
2402. Okay. And so generally, with FDC, for example, currently our EBITDA per kg is roughly around 150. With FDC, what is the differential that one can expect between spray dried and FDC in terms of EBITDA per kg?
No. Sorry, come again this. What you are saying is that SDC and filtered coffee, you are saying the percentage of...
Currently within spray dried, we are doing around 150 rupees EBITDA per kg.
Excuse me, Mr. Agrawal, can you use your handset, please? There is some disturbance which is coming along with your voice.
Okay. You are saying that...
Is it better now?
Yeah, now better.
Yes.
Now better. You're saying...
Yeah. What I'm saying is currently with our entire capacity being spray dried, we are doing about 150 rupees per kg of EBITDA. So with FDC, what is the differential? Like, say, is FDC a 200 rupees per kg kind of EBITDA product or 220, 250? If you can provide some relative guidance on that.
As per the current price levels, because now I am not doing any FDC, right? But as per the current market prices and all, if I take that into consideration, it is around 28 to 32% difference is there between SDC and FDC.
20 to 30%.
32%, yes.
Okay. And lastly, sir, our packaging capacity, which was 5,000 metric tons, we was looking to increase that. So have we increased that?
Yes. Now we are doing 5,000 metric tons of packing for the spray dried and agglomeration. For freeze-dried coffee, we are targeting maybe around 70% in bulk and 30% in packaging, glass jar packing.
Right. No, actually, last quarter you said that the capacity for packaging has increased to 5,000 tons and that you're looking to add one more line. So have we added that line or that will come later?
No, that we added the line. Now, Q1 we did around 45-55 ratio, 45% bulk and 55% consumer packs.
Okay. That was all. Thank you.
Okay.
Thank you. We'll take the next question from the line of Pranay Chatterjee from Burman Capital Management. Please go ahead.
Hi, thank you. Am I audible and clear?
Yes. Audible. Please go ahead.
Great. Sir, so I did some work on, I was doing some work on vintage and the coffee industry in general. And my question is specifically on the demand visibility. I know you have answered this question already, so let me just tell you quickly the two observations I had. Firstly, so from what I understand, in spray dried, at least the largest exporter in India says that the spray dried, the customer only gives visibility for 3 months, whereas in freeze dried, the visibility is probably more than a year. And secondly, if I were to think about the annual volume growth guidance given by you and the largest exporter, the incremental volumes they plan to add in FY27 versus what you plan to add, the number for you is half of their number, which basically what I mean is your growth, the growth that you are planning for is not immaterial anymore. So it's a material number versus the largest player also. So if I combine these things, sir, where is the demand coming from? Because it's not that other players don't have capacity. They also have capacity. So if you can give some more color on which geography is your stronghold, if there is specific type of clients, who are giving you longer than 3 months visibility, because if I were to think about diversity of blends, then definitely you'll keep improving, but it cannot be at the level of the largest player. If I think about economies of scale or the ability to offer a low price, that also fundamentally will improve over time as you scale. It can't be at the level of the largest player. So I'm just utterly confused as to where you are seeing such strong demand and which other players in India with capacity available are not able to capitalize.
I think Mr. Jawahar, our sales director, will talk to you. He will explain more in detail. Yeah.
Sure.
Am I audible?
Yes, sir.
Yeah. See, with regard to what others are doing, we cannot comment, but we have a strategy for our growth and we are focused on that. we have a geographical mix which we are planning and going ahead on that. And we are also scaling up, on the existing geographies, and we are entering new geographies. So that is our strategy on expanding our, volume base.
Okay. So, is it possible for you to be slightly more specific as to which geography is stronger than others for you? Because, sir, what you just said is applicable for any coffee producer, right? So, is it possible to...
It is applicable for everybody, but I'm talking specific to ours, and we have been doing it for the last several years. So we have been scaling up. If you look at our initial geographical mix, it was concentrated on 2-3 geographical areas, but now we have broad-based it. So we are more or less, for example, we are about 30% in West Africa, Russia, CIS, we are about 22%, Southeast Asia, about 20%. Similarly, so we have more or less, broad-based it. Now we are looking at scaling up that volume, in these geographies. So we have also entered new geographies in the last couple of years.
Got it, sir. So my second and last question is on effectively who are the type of customers you are selling to? Are you selling directly to coffee brands, or are you selling to aggregator or distributor? If you can just explain, if 100 rupees is your total exports, how much rupees is directly to the brand? How much is to distributor or someone else? And what is the nature of contracts you have with these people? Because, sir, if someone else is saying it's 3 months only, and you are saying you have visibility for the entire year, there is a gap somewhere, right? So if you can just explain me these 2 points.
See, we are selling to direct brands to 90% of the customers who are direct brand owners. About 10% would go to traders kind of people. Okay?
Mm-hmm.
Yeah. So that's the mix.
And what is the by contract? How many months of visibility do you get in the volumes?
As our MD has already told you, we have the visibility on the volumes for our customers, but we will be reviewing the prices every quarter.
Got it. Okay. Thanks.
Thank you. The next question is from the line of Dipali Bansal from Ventura Enterprises. Please go ahead.
Hello, everyone. My first question is, how much of the capex of the 550 in FTC has already been spent, as this figure was roughly 150 crores in quarter 4?
Out of 550 crores, we almost spent 114 crores during the thing. Rest is the...
Sorry, sir?
Out of 550
in
crores...
In quarter 1?
Yeah, 114 crores we have paid till now.
But we quoted 150 crores in quarter 4 on call. What is the current... Did we spend 114 in quarter 1?
Total is total till date is at 150 crores, correct? You are correct.
Okay. Did we spend anything in quarter 1 for the FDC project?
Quarter 1 is 25 crores we spent.
Okay. What was the product mix between import and export for quarter 1?
Product mix is that 20% is that imports and 80% is the domestic beans.
Okay. Are we still in line with the 400 crore debt for the year FY28, or are there any deviations?
No deviation. Same thing.
Okay. The input cost for aluminium was high last quarter. Is it still the same, or is it affecting us in any other way?
Almost same in that.
Okay. My last question is regarding the geographical data. Could you give us the geographical bifurcation?
Yeah, geographical bifurcation as our sales director will give.
Yeah. So continuing on my previous explanation, we are about 30% we are getting from West Africa, about 22% from Russia and CIS, 20% from Southeast Asia, and Europe about 10%, Central America about 15%, and India about 5%.
All right, sir. Thank you so much. That's it from my end.
Thank you. We'll take the next question from the line of Paras Chheda from Purple One Vertex Ventures LLP. Please go ahead.
Yeah. Thank you, sir, for this opportunity, and congratulations on a strong set of results. Sir, my question, first thing is, it's guided, but, basically, this is the current or Q1 average coffee prices, and assuming that 10,500, volumes for FY27, right, sir, can we sort of, ballpark the revenue number between 850 to 900 crores? Would that be fair? I mean, of course, I know the coffee prices will be volatile and, keep fluctuating, but I'm just at the current level for Q1 basis, can we expect that kind of a revenue number, ballpark, for FY27? About 850 to 900 crores?
Yeah. If you take the Q1 average realization, then it should be the same. What you are saying is the same. It should be in the region of around 850 to 900 crores.
Understood, sir. And the margins, in any case, you said, okay. Sir, for FY28, now, assuming, end of June, the FDC capacity is now, ready for commissioning, what capacity utilization do you expect in the second half of FY28, sir? I mean, beginning Q2?
We are targeting to do around 60-65% of the installed capacity.
Of the 5,500 that will come in?
Yes, but as I mentioned that we are going to, in a second quarter only of the FY28, we are going to start the production. So obviously, you can consider for almost 8 to 9 months, out of which you will take a 60-65% capacity utilization, not on 5,500.
So your exit FY28 will be at 100, or that will be at about 60%?
Sorry, Mr. Chheda, your voice broke, sir.
Yeah. No, what I was saying is your exit of FY29 capacity utilization will be about 100%?
You are talking about the current year or next year?
No, I was talking about FY28. We will see this heavy capacity utilization picking up from July of 2025. So now you said 65% or whatever, almost approx utilization. But at the exit FY29 or FY28, should we 90% or you?
Understood. I'll just explain you. 5,500 metric tons is the capacity, out of which I said that we are going to use it for only 8 months or 9 months of the production we may get it. So in that case, it is 3,600, 3,700 metric tons. On that 0.65% capacity, it should be in the region of around 2,300 to 2,400 metric tons FDC will add in FY28.
Okay, about 2,800 odd.
2,400.
400, okay. Out of the 5,500 for the 9 months that we.
Yes.
Right. And sir, just last query mine. And broadly, you guided for a positive operating cash flow in FY27 as well, and further improvement in working capital. So now after Q1, are you still confident of delivering positive annual cash flow from operations? And what working capital days do you expect FY27 end?
Yeah, working capital days, I think our CFO will be.
The working capital days is that the working capital days is in between that 120 days, 120, 130 days. So we will maintain the same levels, or we will be little lesser level with that 125 days kind of thing. And next question.
Operating cash flow will be positive for FY27?
Yeah, because operating cash flow is the overall for the FY27, it is the positive only.
It's likely to be positive. Okay.
Yeah, first off, normally overall FY27 is positive only. Correct.
Understood, sir. Fine. Thank you so much, sir.
Thank you. The next question is from the line of Utkarsh Chanana from SMC Private Wealth. Please go ahead.
Hello, am I audible?
Yes, you are.
Thank you. So I have a couple of questions on the supply side of our business. I wanted to understand which is the route our company is most dependent on for exporting the products.
No, I think your question is not clear. Can you again repeat?
Sir, I wanted to understand, sir, we export our products, so I just wanted to understand if we are dependent on a particular route for more volume of our export business.
If I understand your question, you are asking whether we are dependent on a particular route for our exports. No, as I mentioned already. As I mentioned already, our strategy has been in the last few years to broad base our sales. So we know where our growths are going to come from, so we are focusing on that.
All right, sir. Thank you so much. That's all.
Okay.
Thank you. Thank you, sir. The next question is from the line of Aditya Singh from Multi-Bagger Stocks. Please go ahead.
Good morning. I had just one question regarding the wholly owned subsidiary, the Delecto. Could you please share some more details about that?
Again, your voice, your split actually.
Sir, your voice is not clear actually. Mr. Singh, may I request you to kindly use your handset?
Okay, I'll use the handset. Is it clear now?
Yes.
Yeah, now it's okay.
Okay, I was just asking more about the subsidiary, the Delecto. Can you shed a little more light on that?
Your Chicory.
Delecto, the subsidiary?
Delecto, okay. One second.
Yeah, Delecto, we are doing the chicory things. We have the capacity of 2,000 metric tons per annum. And it is...
And what is the revenue?
Revenue is at per annum basis, it's 40-45 crores.
Is it profitable or not?
It's profitable.
Okay, thank you. That was all from my side.
Oh, thank you.
Thank you. The next question is from the line of Preet Shah from Blue Star Capital. Please go ahead.
Hello. Am I audible, sir?
Yes.
Yes.
Yeah. So my question is, what was the utilization in Q1 of the whole capacity? Hello.
Q1, we took 100%, and only 15 days we took annual maintenance. Otherwise, we are utilized to 100%.
Okay, so the 4,500 metric ton which we have added, it is also at 100% utilization. Is that understanding correct?
Yeah, we are utilized at 100%, which is the 2,402 metric tons produced.
Okay. And sir, from Q2, we can expect good growth in numbers as 20-25 days was, what we can say, maintenance period. And also coffee prices are also going up.
Yeah, volumes will grow definitely. Further quarters.
Yeah, got it. Thank you, sir. And all the best.
Thank you. The next question is from the line of Ankur Gulati from Genuity Capital. Please go ahead.
Thanks. Am I audible, sir?
You are, but I would request you to kindly use your handset, please.
Better now?
Yes, sir. Please proceed.
Okay. So quick question on freeze-dried. There was some discussion in last call that eventually you will go from 5,500 MT to 11,000 MT in financial year 29. So that plan is on, right? There's no change in that longer term view.
11,000 metric tons. Current capacity is going to adding 5,500, so it will be 16,500 metric tons. And also,
yes, but
another, I understand. Another additional line which is likely to come soon after completion in the first line of the 5,500 metric tons.
Perfect. And can you give us the volume sold again for this quarter, sir?
Yeah,
18.
this quarter 1,856 metric tons we sold, and the realized 160 crores, 160.9 crores.
Okay, fine. Thanks.
Thank you. Members of the management, I would request you to kindly come closer to the device and speak, please. Your audio is low, sir. Thank you so much. We'll take the next question from the line of Mayank Agrawal from Scientific Investing. Please go ahead.
Yeah, hi. Thank you for the opportunity. I have a few questions. The first question is regarding the CFO conversion. Like, as we go ahead with the FTC project commercialization and the working capital improvement, what should be the sustainable CFO to EBITDA conversion over the medium term?
Yeah, just 1 second, Maya. CFO will give an answer.
Our EBITDA levels will be that sustainable will be 150 to 160 range with the current product mix.
I'm talking about the conversion rate, like how much we will be able to convert to cash flow.
We are converting 100%.
And it should be sustainable going ahead, correct?
Yes.
And okay. And the second question is regarding the debt. So like after the phase 1 of FDC project is commercialized, earlier management had guided like debt should peak around 400 to 450 crores. And since the past expansions were funded through a combination of equity dilution and debt, so will the incremental operating cash flow will be used towards the debt reduction, or it will be regarding the phase 2 funding for the FDC project?
Yeah, phase 2 FDC project will be using whatever the incremental cash flow will be coming for FY28.
So going ahead, the debt should not increase over 400 crore, like 400 to 450 crores once the phase 1 is commercialized.
Correct. We are at the same range, 450 maximum. That is the maximum peak debt we are expecting.
Okay. And just one follow-up question on this, like on the phase 2, the phase 2 project, since it will be the incremental cash flow will be used, so it won't be requiring any equity dilution, which were the part of the past expansion plan by the company.
At this point of time, I cannot comment, but maximum we will not go for that other equity dilution. But this is that now is not material question. We'll see in that FY28 incremental cash flow basis, then we'll take a call.
Okay. Thank you so much.
As of now, as per plan, not required.
Okay. Thank you so much. That's it from my side.
Thank you. The next question is from the line of Utkarsh. Somaya from Eco Quantum Solutions. Please go ahead.
Thank you for the opportunity. Sir, if I take your EBITDA of 32 crores and divide it by the sales volume of 1856, I get a EBITDA per kilo of 172. And I think you mentioned you did 157. So can you please explain this gap?
Yeah. In this coffee, chicory volumes also is there. If you reduce some 11 crores of that chicory sales, then it will be the same range.
So if I remove 11 crores from this 32 crores?
No, 11 crores from the sales. So otherwise we can calculate like this. So out of 32 crores, you can reduce. So 161 minus 11 crores, you can calculate it, then that will come.
No, but how much of the 32 crore EBITDA comes from chicory?
Yeah, that will be around 2.1 crore.
So let's say 2. So out of 30 crores is from 30 crores is right. So 30 crores is still like at 161.
Correct. No. 2. Sir, exactly if you want the chicory things is at 2.2. If you minus it, then it will be coming the same number.
Okay. So now for the whole year, FY27, how much chicory sales and EBITDA should I assume?
It is the 40 to 45 crores. The same EBITDA levels, almost.
And around 8 to 10 crore EBITDA.
Yeah.
Right. And so the remaining of your sales volume can I assume you will do 9,000 out of the total 11,000 for the whole year?
Whole year, we are expecting that 95% of the capacity utilization.
See, 95 would be of the capacity. So it's fair that you will easily do 10,500
Yes, correct.
and 157 to 160 rupees EBITDA per kilo.
Correct.
10,500 and 160. And sir, you said that next year you will do around 2,500 tons of the new FDC capacity, no? Correct?
2,400 kind of thing.
Yeah. So basically, if I combine the two, it will be around 13,000 in FY28, your volume. Am I right? And
Correct.
and the EBITDA per kilo will be 20% higher for FDC?
Yeah, 20 to 30%. Correct.
So what will be the consolidated EBITDA per kilo for FY28, given you will do 2,500 tons of volume?
So we'll be sharing that later stage.
But if mathematically, if I do that, the 2,500 that takes 160 into 1.2, which is 192 EBITDA per ton, and the 10,500 does 160. So I'll get the number, right?
Correct.
Okay. Thank you and best of luck. And one more, sir, last question.
So I'm sorry to interrupt, sir. There are others who are waiting for their turn.
Okay, no worries.
I'm sorry.
No worries. Thank you.
Thank you so much, sir. We'll take the next question from the line of Piyush Jain, an individual investor. Please go ahead.
Hello.
Yes.
Hello.
Please proceed.
Yeah, am I audible? Yeah.
Yes,
Sir, I have
yes,
two. Yeah, I have two questions. One thing, with this capacity incremental started with 4,500 odd, what could be the ballpark number revenue we can achieve in the 2027? How much it can add in the revenue in incremental? And second, these entities which we are merging, like a Delecto and a Vintage Coffee, what is their capacity and revenue potential or revenue they are generating? Can we say Vintage Coffee business right now what we are doing and whatever the entities which we are merging, which will add to the incremental top line of the business when this overall process of NCLT and everything done through, and what is the type of revenue and margin they are doing it? So just want to understand, once these entities merged on a consolidated basis, what will be the jump in our revenue from these entities which we are bringing in? Am I clear with my questions?
Yeah, Piyush, I'll explain to you. I understand your question. I'll just brief you. This Delecto Foods Private Limited is a 100% subsidiary of Vintage Coffee and Beverages Limited. So whatever the consolidated figures to which we are taking into consideration now, we are already declaring that will remain more or less same, because there is no additional revenue adding to the VCPL P&L. Okay. Because this is a 100% subsidiary. And with regards to the Delecto Foods Private Limited, this company is purely into manufacturing chicory product, chicory and chicory mixed products, and it is already utilizing in optimum capacity levels. And the revenues are now around between 42 to 46 crores in a year on year. And there won't be a much growth on that unless we go for further expansion on this. At this point of time, we don't have any plans to expand the chicory production capacity, but we'll continue to have these revenues of say 42 to 45 crores. And this company is making a profit continuously for the last several years, and it will continue to make the profit because there is a good demand for the chicory, and that is in a domestic market as well as the international market. So we'll continue to operate this company in these levels. In the event of any further demand coming up, then we will keep plans to expand the capacities maybe after 1 or 2 years time.
Okay, and on first question.
Yeah. Go ahead.
Yeah, the first question I asked, with this incremental capacity coming in current year, what could be the revenue potential we can have? Because see, last 3 quarters before this, we were doing 150 to 160 crore and we were optimum utilized only. So now this new capacity coming in, what could be the additional revenue? And just second follow-up on this Delecto, is the margin profile is similar to what Vintage is doing right now, 18 to 19%, or with this incremental revenue adding up, the margin blend will decrease?
No, chicory product, first question I'll give an answer to you. 4,500 metric tons which we are added now for this 6,500. So with that, the additional revenue which we are going to get into this main is around 360 to 380 crores, which coming approximately around 890 to 905 crores total. So that is the revenues which we are anticipating. If we go with the full capacity, maybe around 95% of utilization.
Current year? You are talking about current year, FY27?
Yes.
Okay.
Regards to the Delecto chicory plant, a chicory plant profitability more or less same as in a coffee, maybe slightly better than the coffee, but since the chicory crop is not there this year, there will be some incremental profitability will be there in a chicory, because the chicory acute shortage and then the prices are short of like coffee earlier 3 years back. So obviously there will be a higher realization in chicory also this year.
Okay. Just to understand, I didn't hear properly what you said. You said this 4,500 capacity coming in this year, which can add around 350 to 360 crore of additional revenue. Am I saying correct? Am I understood correct?
Yes, you are right.
So ballpark we are saying 500 to 600 crore which existing we are doing, and 300 to 350 crore we can add in this current year. Correct? My understanding is correct?
Yes, you are right.
Okay.
360 to 380 crores will add on the existing turnover. Yes, you are right.
Okay. Thank you for the patient answer, sir. Thank you and all the best for the future.
Welcome, Piyush.
Thank you.
Yeah.
Ladies and gentlemen, we'll be taking 2 last questions for today. The next question is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Hello, sir. Hope I'm audible.
Yes, little louder, please.
Yeah. So congratulations on good set of numbers, sir. My question is, sir, we have around 130 days of working capital days, which means on every 100 rupee of sales, maybe we will need 35 crore of working capital, which should ideally give us good operating cash flow. But so far we have not done that. The only reason I can think of is because we are in a very good growth phase and hence we need lot of inventory for the growth. Is that the reason?
Yes, that is the one reason, and we keep expanding the capacities and adding.
Okay. So, sir, my question is, yeah, sir, please go ahead, sir.
Yeah, yeah, audible.
Hello?
Sir, it's lower. Yes, please proceed, sir.
It's better, sir, now.
Yeah. Actually, your point is correct, actually. So now the future years, definitely the benefit will be coming. So working capital cycle will be at the same level of 120 days, 120 to 125 days.
Okay, sir. So my question is, sir, let us assume if we didn't need this growth inventory, let us say we were growing at 2, 3, 4%, then the kind of EBITDA number which we have done, how much of operating cash flow we would have generated on that?
Whatever the profit plus the depreciation that will be generated. If you talk with the last year is that 71 plus 8, almost 79 crores is that we can generate if growth is not there.
Okay, got it. And sir, we are in the B2B space and our working capital days is around 130 days. We have another listed company. Of course, it is of bigger size and they're listed for a long time, but they work around 40 days of working capital days and also they have a B2C business. But my question is, as we grow in terms of revenue, first, why both of us being in B2B, why our working capital days is almost 3 times of the bigger player? But do you see a scope of improvement going forward, and what could reduce the working capital days? If you can, just give some kind of comparison of industry dynamics between these 2 companies.
So normally working capital cycle in the entire industry is that 100 to 120 days, 130 days. So this entire instant coffee industry, we are also same line with that same thing. We are also 120 to 125 days.
Okay, sir. That's all I had. Wish you all the best, sir.
Thank you. The next question is from the line of Nirvana Laha from Badrinath Holdings. Please go ahead.
Hi, am I audible?
Yes.
Yes.
Great. So, two quick questions, sir. The first one, you said Q1 you produced about 2,400 metric tons and you have sold about 1,800 metric tons. So, which means you've built inventory and you have a quarterly price reset. So, I just want to understand, maybe coffee prices won't go down right now because of the cycle. But if coffee prices went down, you would have to book inventory losses, right, with this kind of higher production compared to sales?
Yeah, it is like this. And this first quarter normally, because we can't go with an under capacity utilization. Since we have a capacity, we need to run the plant, and it is 24/7 running plant. So we have the commitment from the customer for the whole year. As I said, the volume commitments we take for the whole year. Obviously, the volumes what we have produced it, we have some sort of understanding with the customers that they are going to pick up this volume. So in a quarter two, so obviously this whatever the quantities which we produce, surplus quantities are there, that will move in a quarter two, Q2.
Understood, sir. Just to clarify, I understand the volume commitment bit and therefore you have to produce, but if coffee prices move against you, you have to book inventory losses, right? That is mechanical accounting process.
No, as I mentioned to you that we always stock some around 40 to 45 days coffee beans in our factory on our side. So when we replace this material with the new orders, so obviously we take that, there won't be any price advantage or price, gain or loss on this. So it's like a back-to-back basis.
Okay. Understood, sir. The second one, sir, many participants have asked you about freeze-dried coffee. On same lines, I want to understand little in depth. If you can just patiently answer this, sir, because a lot of participants want to understand this. Sir, in freeze-dried, can you help us understand who are the largest suppliers globally? Like which countries are the largest suppliers? And your 5,500 metric ton capacity, right? What percentage market share is that of the global demand in freeze-dried coffee? That is one. Second, sir, we have heard that even your larger listed peer, right, in India, they have not been able to crack the USA freeze-dried market because US customers really prefer the best blends and all that. So given this, if you can detail out whether US is a target geography or which geography specifically you're targeting. You haven't mentioned the countries. If you can mention that, it will be good. Also, whether under Mr. Jawahar you have hired specialist salespeople who will, in different geographies, who will help you sell this premium product. Because if I understand correctly, freeze-dried coffee is a very developed market product versus spray-dried coffee, which goes to all kinds of countries. So if you can tell, and you also mentioned that you have signed LOIs, right? So on what basis were the LOIs signed? Because they have not tasted your product or have, seen your product. So if you can help us understand all these aspects in a little more depth, sir, because everybody wants to know about the freeze-dried coffee market and what your plan there is.
Okay. As per the information available, so I can say that it is around 250,000 metric tons of freeze-dried coffee market, out of which our 5,500 metric tons is around 2.2%. It's a very negligible percentage if you see. And with regards to the market geographies which we are now targeting for the freeze-dried coffee and where we got some sort of commitment by way of LOI and all, is I can at this point of time I can generalized way I can explain to you. It is come from Russia, Europe. I don't know, but I also got that from US and as well as in Southeast Asia. So these are the commitments which we got it for the volume. And with regards to the quality and the price, these are the commitments which you got it. LOI we entered into them. The reason is that they don't want actually to we sell it to somebody else and they don't get the material. So we have signed an agreement that on the letters that we will supply to them the freeze-dried coffee as soon as we start, subject to developing the blend as per their requirement and the prices we agree both. So these are the subject to quality and subject to price.
Understood, sir. And these are the same customers that you're supplying spray-dried coffee to, the coffee brands that you're supplying? Are they the same set of customers?
Two are the new customers.
Okay, and how many old customers, sir?
5 customers.
5, okay, sir. And one more question I had asked is, can you tell us about the internal sales force strengthening initiatives or, business development initiatives that you've taken, if any, for freeze-dried coffee specifically?
Freeze-dried coffee, we have not initiated any sort of the new sales team. The existing team under the sales head, Mr. Jawahar, he has 3 managers and 1 general manager, and they are only handling it. And we are quite confident these people are capable of handling the things for freeze-dried coffee also.
Okay, sir. Understood, sir. And one request, sir, some investors would like to visit your plant and interact with you in person if that's possible. So kindly facilitate something like that. We would all like to visit.
Sure, most welcome. We always invite the people to factory to see and to discuss in person also. Welcome, no problem.
Sure.
You can send a communication to us by email. So we'll give you your time and all. So accordingly, we allocate our officer who will be taken to factory and show you.
Thank you, sir. Ladies and gentlemen, we'll take that as the last question for today. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Thank you so much. Thank you for joining, and we really appreciate your concern, and we are very glad, and we are always available to give an answer 24/7. Any doubts, any clarification, please do contact us. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Nuvama Wealth, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.